You are listening to Mining Stock Education.
Until recently, I had stayed away from earlier stage, higher risk juniors, but now I see that's where the value is now, because a lot of these later stage companies have moved up so much, and they're becoming more fairly valued. I see the value in the market lower in the food chain, and if you take a look at some of these stocks and how they're moving, other investors are seeing the same thing.
Welcome back to Mining Stock Education. I'm your host, Bill Powers, speaking for our monthly interview with Dr. David Erfle of Junior Miner Junkie with the Y.com. David, welcome back onto the program. It's been a month since we last chatted, and gold is still going strong, although it may be a little bit of a pullback. But overall, have you made any major portfolio moves, or how are you positioned in the last 30 days? Any moves you make?
Yeah, well, thanks again for having me on. It's always a pleasure talking to you every month. But it's my subscribers and we've basically been waiting for this month for what's happening right now for quite a while. We had that breakout in the GDX and GDXJ in the mining sector, but first we had a false move down, right? When you had everybody freaking out in the stock market at the beginning of April, gold stocks went down with it. And I remember getting several emails, some from subscribers and others from readers of my Kitco column, saying, I'm pretty much out because the gold stocks are going to tank with the stock market. I can't take it anymore. I've lost money. I don't have the patience to do this anymore, what have you. And basically that false move down created the energy for the breakout, and it left a lot of people behind. And ever since then, we've had a lot of positive news on the back of gold. I mean, gold is basically proving its role of maintaining purchasing power during these periods of economic and political uncertainty and all this social upheaval. I mean, the geopolitical concerns, a growing sovereign debt crisis, and the recent evidence of stagflation setting in during an ongoing trade war have basically been the principal drivers of gold now becoming the safe haven of choice. And then last Friday, after the market closed, Moody's Investment Service pretty much joined, Fitch and the S&P of joining these other credit rating agencies and downgrading U.S. debt from AAA to AA last, at the close of the market. And basically that signals that formerly risk-free U.S. debt is no longer risk-free, and that gold is now the lone safe haven of choice. And it began to act like it again, following a month-long 11% correction from that all-time isolated high at 3,500 that had everybody calling for, not everybody, but a lot of market pundits calling for the gold market to be over. Gold futures reacted in kind to what Moody's did this week, and it's gone back up above 3,300. It's broken that downtrend line, but more importantly, the silver price has done the same, and it's risen above $33, which was its downtrend line. And basically, if you take a look at the gold silver ratio, right? That's something very important to watch, because when the stock market puked, a lot of silver investors puked too, because we had the silver price have a sharp move down below 30, and I think it got down to 28 or so, but then a really strong hammer on the monthly. And if you take a look at what happened the last time the gold silver ratio went up above 100 was during the pandemic, and it got to 124 ounces of silver to equal 1 ounce of gold. That we also had a huge hammer in the silver price, and the silver almost tripled in like 5.5 months. So if you take a look at that, that's showing us that, hey, the stock, when you see the higher risk silver, and especially higher risk silver juniors and higher risk juniors starting to lead now. If you take a look at the GDX and GDXJ, they're still well off their recent highs. But if you take a look at the silver ETFs, SIL and SILJ, they've already reached their recent high. And if you take a look at the venture exchange, which is which is made up of 50% of junior resource stocks, that continues to break out of a 3-year base. So it's a really good time, finally, to be a junior precious metal stock speculator here.
So you're not making any major moves then. It's just stay steady. Like you've put in the work, you're able to control your emotions. You've developed.
Absolutely. A couple of weeks ago, I put out an article saying that it's old turkey time, right? It's be right, sit tight. Don't try to trade in and out. My subscribers and I, we've done all the hard work of making sure that we've accumulated the right companies to be in, waiting for this bottom and waiting for this breakout from this 4-year bottom. So basically, it's basically once these things get to be a large part of your portfolio, absolutely trim some and take some off the top. And if you can get your original investment out at a really high price, then go ahead and do it. I mean, I have these rules that I adhere by, and one of them is if a stock that first of all, I don't invest in a junior unless I see at least 3 times upside. And then once I see that 3 times upside, I go ahead and take my original investment off the table and let the rest ride and hold because basically the outcome that we're looking for is a major to come along and buy the company at a huge premium. And we're really starting to see that in the silver space now. And when you start to see that in the silver space, that is very bullish because silver and as well as the miners and especially juniors have lagged this gold rally for so long, and it's frustrated a lot of people. And when you start seeing the higher risk silver, the higher risk juniors now outperforming, so basically, you saw the GDX and GDXJ peak out in mid-April, while, like I said, the venture is continuing to break out. So what that's telling you is a lot of the smart money that got in early, they're taking that got into the miners early. They're taking some of that profit off the table and they're rotating it into these juniors that are still massively undervalued, not only in relation to the gold price, but in relation to how much gold they've proved up in the ground and silver.
Are call options an option for you, Dave? When you find is that a part of your bullish play?
No, because you have to have a margin account to do that, and I just keep my all cash account, right? I try to keep it as simple as possible because if you have a margin account, then it might influence you to try to get tricky, short, do things like options and shorting stocks and things like that. So I don't do that. Like I said, I have an all cash account. I do massive amounts of research on these companies to make sure that myself and my subscribers are properly positioned in the right ones while the sector is broken out. And I believe I've done that, especially if you look at my top 10. I have a JMJ top 10, and a lot of these stocks several are up triple digits, and several of them are breaking out of huge bases along with the stock market and starting to lead, especially, and it's heavily weighted with silver companies. So there's a couple of silver companies in there. I wrote about it in my article last week. One of them is Vizsla Silver, and that stock is breaking out of a huge 5-year base. And the other is Dolly Varden Silver. That's an earlier stage company. So it is not really broken out yet, but they're accumulating a lot of properties here. They've accumulated 3 separate properties recently, and they're getting bigger. And what they're trying to do is become the preeminent silver exploration company in the Golden Triangle. And they recently got a big board, a U.S. big board listing, and rolled back their share structure. So then that was perfect timing to basically collect more properties, get that big board listing, because once generalist investors really start coming into this sector, then they're going to, they have Robinhood accounts and they can't invest in over-the-counter juniors, over-the-counter stocks. So they're going to be looking for silver stocks, gold stocks that have these big board listings. And if they have a tight share structure, and especially a company like Dolly Varden Silver that only has like a 8 or 10% retail float, they've got a lot of room to run to the upside.
Dave, when you're looking at adding a position, does it still have to have 3 times the upside at any point in the upcycle? That's still a requirement.
Absolutely, absolutely. I'm not going to speculate. I'm not going to recommend investors speculate on these high risk vehicles unless I see at least 3 times upside. Absolutely.
What about some of the shenanigans that the hotter the bull phase gets? Like I've gone through, I would say, 2 cycles, 2016 and 2020, like legitimate bull cycles when you could make really good money. Okay. And I can see some of the scumbaggery. It seems like queuing up. I mean,
It's starting. Yep. Yep. I mean, you're seeing a lot of these lifestyle juniors, these micro cap lifestyle juniors that couldn't get financed earlier. They're getting financed now. So, all the more reason, you need to really do your due diligence because all the information is there on the internet. You just need to know how to find it and do your proper due diligence into the management teams, what they've done in the past, into the properties, into what they're trying to do. Take a look at if they got a bunch of cheap paper while they're putting together this company. Look at their business plan. What do they plan on doing? Does it look like they're just grabbing onto a sector that's hot, not knowing what they're doing, but they know how to mine the market more than they know how to mine gold? That's what you have to be careful of.
It's so true. Dave, are you doing any site tours now that you're positioned in your gold stock portfolio? Like, what are you willing to do in terms of traveling to a site tour or conferences?
Yeah, I've scaled back on that, spending more time with my family since I'm able to do a lot from the computer, and I've already have these really strong relationships with the management teams of the companies that I'm invested in. I've met with them face to face in the past. I skipped PDAC this year because I had family commitments, but I am going to Beaver Creek. I never miss that one. That's my favorite conference. So that's the next conference I'm going to. If I'm offered site visits by companies that I'm interested in at Beaver Creek, then I will probably start going to them again. I mean, I haven't been on one in about a year or so.
In your retirement account, you invest in some of the bigger gold miners. You mentioned how some of that money is moving down the food chain into the smaller companies looking for greater returns. In your retirement portfolio, are you going to move some of that major miner money down the food chain?
Yeah, I already have in one. Yeah, I'm really glad I did, right? I mean, I basically said to myself, when I got into this sector over 20 years ago that I would never invest in majors because the upside in juniors was so much more. And if you know what you're doing, you can make so much more money in the juniors. But recently, this sector, the mindset had changed so much that the mining stocks were doing so much better than the juniors. So a couple of years ago, I decided to put money into miners in my retirement, in my investment, my retirement portfolio, and I'm glad I did because before this year, that portfolio was performing much better than my junior portfolio, and I do share that with my subscribers, so they were thankful as well.
Are you looking at any other commodities? Platinum may be breaking out here. Anything you got your eye on besides gold and silver?
I do like copper, so there's a couple of copper companies I have my eye on. There's a company that I'm still waiting. It's very close to getting to where I want to sell it, and because the company basically had to raise too much money during a bear market, and they blew out their share structure with too many warrants, and which has limited the upside in the stock. I still like the story, I still like the company, I still like what they're doing, but the upside is limited now, and I that 3 times upside is which may still be there. I think it's going to take a lot longer to see. So I'm getting close to selling that stock, and I've been I've been having one-on-one meetings on Zoom meetings with several companies, and I've narrowed it down to a couple. I want to invest in, and they are higher risk. So um, until recently, I had stayed away from earlier stage, higher risk juniors, but now I see that's where the value is now, because a lot of these later stage companies have moved up so much, and they're becoming more fairly valued. I see the value in the market lower and lower in the food chain, and if you take a look at some of these stocks and how they're moving, other investors are seeing the same thing.
And it took you a while to get there, Dave. I've been asking you that for like 18, 24 months. It seems like,
Yes.
when are you going to do that? But
Yeah,
you're,
it's very close. I mean, I'm waiting for this stock to hit my limit sell order, and it's getting close. So, like I said, I've done the due diligence on a couple of companies. I know the companies I'm going to be invested in. So all I have to do is write the reports, because I write a detailed report on the company and send it out to subscribers before I invest in the stock. So basically, we try to all get in it together at the same price.
so on a week by week basis, if you're confident in your portfolio, is it more the macro stuff that you're following to see how that might relate to your portfolio? Where,
Oh, absolutely. Yes. I mean, and now it's the difficult part. Believe it or not, the difficult part is not accumulating the right stocks, although it is difficult. The most difficult part is figuring out when to trim and when to sell the stock, if the stock has yet to be acquired by a major. I mean, and then also you want to make sure, not make sure, but you don't want to see the companies that you spent all this time acquiring and now they've started to move. You don't want them to get taken out by a major too soon either. You want them to run on their own for a while first. And fortunately for myself and my subscribers, we have several that have already done that. There's already a couple that we've taken a third of our investment out off the table in profit. So when we're just holding the rest, hoping that the stock gets bought out, but not too soon.
do you like the Pan American buying Mag Silver? If you're a Mag Silver shareholder, you like that deal?
Oh, absolutely. And I'm a Pan American silver shareholder in my retirement account. So I like the deal, even though the dilution the dilution was short term painful. The long term gain is huge. I mean, Juanicipio is a fantastic asset, even though they're only acquiring 44% of the asset. It's Fresnillo owns 56%, and they run the mine, but it's an incredible cash flow generator, and it's going to add to Pan American's bottom line, and I really like the deal. So I wasn't in Mag because I didn't see 3 times upside, and I was correct on that, because if I'd have purchased, well, I mean, it all depends when you bought it. I mean, if you'd have bought Mag down when it was trading at $8, then absolutely you'd have close to 3 times upside. But if you're a Mag Silver shareholder from early 2021, that's when you got in, then you didn't make any money, because the stock is still trading is being bought out at 25% less than its all-time high. Nevertheless, if you're a Mag shareholder, this is a good deal, because Pan American is I believe one of the top silver producers out there, and that's why I hold it in my retirement account.
You've had some home runs in silver stocks. 2011, you had First Majestic, a 30 bagger, right, on that one.
25 bag or something like that.
Right.
Yeah, it went a long way to changing my life. That one stock, that and Wheaton Precious Metals, and I own Wheaton Precious Metals again, having bought it back a couple of years ago, and that stock has doubled again for me. So it's a fantastic model. They've grown into basically being a bimetallic royalty streaming company, and I believe they're one of the best.
Hmm. You've also had like Alexco Resources, which was a silver company that disappointed. So I just bring that up to say we've all had our wins and losses.
Oh yeah, but it's funny. I did really well with Alexco back in 2011, but then gave some of it back when they couldn't make a go of it, but up there in the Yukon,
So
and
my question is, should you play the same stock in multiple cycles? Because
oh yeah, it all
yeah.
depends. I mean, I've had a couple where Bear Creek was another one that I did really well in the first go around, and the second go around I gave some of it back. So, I mean, don't just go on past performance of what a company may have done for you in the past or others in the past, you got to dig deeper. And of course I dig deeper, but obviously not deep enough. But that's the trappings of this sector, right? I mean, as long as you get 3 out of 10 right, I mean, you do really well. It's basically knowing when to cut the losses, and take that money and put it into something else and trim the gains on the way. Because I've left a lot of money on the table also during the past cycle. But these are all lessons that I've learned over the past 20 years or so that I'm passing on to my subscribers, right? I mean, it's not a big loss unless you don't learn from it. So I've learned from all my big losses, and I've applied them in future investments, which have paid off.
It's a lesson. You learn it and you keep it. What about the Junior Miner Junkie subscription sentiment indicator? I think we talked last time. You even had some, with the people got scared out. Where are we at?
Unfortunately, yes. I really felt for them because, they held in for so long. And then when we had that false move down, it was kind of like, this is it for me. That's enough. I see the gold price going crazy, and the gold stocks did it again to me. But it's starting to get better. I'm getting more interest again because I think generalist investors are starting to get interested in this sector now. I mean, if you take a look at the gold space, it's outperforming everything here. So, especially when it started to outperform the stock market, AI, and crypto, until the Bitcoin's right back up to its all-time highs again. But still, gold has outperformed it this year. It's outperformed pretty much everything. So, once you have a couple of quarters of these incredible cash flow numbers that these miners are making, they've done a great job of fixing their balance sheets. They're paying dividends. They're buying back shares, but now their investors are clamoring for growth, and you're seeing that in the pickup of M&A.
Dave's website is Junior Miner Junkie with a Y, Junior Miner Junkie with a Y. You can go there, and Dave gives one weekly email for free, a commentary on Friday evenings, and you can learn more about what he offers at that website. Dave, thanks for coming on the show today and sharing your insights.
Thanks again for having me, Bill. Always a pleasure.